Ladies and gentlemen, welcome. We got a video for you. I want to show you guys how I find a stock and then how I analyze the stock. The way I find a stock, it's always different. It comes from anywhere. I don't care where my source originates from. It does not matter. All that matters is that I found the stock. So I was watching this little clip from Elon Musk, this new speech he gave, and it made me, for some reason, just have an inkling to go relook into solar companies. And I was actually pleasantly surprised with what I found. And I had to stop halfway through and was like, you know what? I got to do this with the people. Let them see how my thought process works. So let's get into it. My name's John. I got options. This is Elon Musk.
The question of where does the energy come from? And here's where I think solar energy is very much underestimated in terms of its capability. So if you think about what would the Earth be without the sun? The Earth would be a frozen dark ice ball at roughly 3 degrees above absolute zero. It would be quite unpleasant. So, very cold and dark. But because of the sun, we're at quite a nice temperature, quite pleasant, roughly 300 degrees above absolute zero, and the sun powers almost the entire ecosystem is solar powered. When you say well, how much land would it take to generate electricity? There's a giga per square kilometer of solar radiation that reaches the surface. So for every square kilometer, there's a peak power of roughly a gigawatt, which is comparable to a power station. Now, the sun doesn't shine all the time, obviously. So when you net all of that out and say, how much energy per day does 1 square kilometer yield? It's roughly 1 gigawatt hour per square kilometer per day, which is still a lot. So, and if you do the rough math to power the United States, which is a heavy user of electricity, would take less than a 200 kilometer by 200 kilometer solar array, power the entire United States. And if you drive through the United States, there's plenty of sections of the United States where there is basically no people. Or another way to think of it is a small section of the Sahara could power all of Europe or the world. Now, I'm not saying you would be so concentrated in the placement of solar power.
That really sparked my attention back on solar. So then I said, what's the solar ETF? Because that's where we're going to find all the solar stocks. So this is what I do. I looked up the solar ETF TAN. And what do you know? The biggest holding is this company, First Solar. We're going to do more digging together, and we're going to pull up the Excel spreadsheet. We're going to get into First Solar. Then I pull up Market Screener right here, and I look up First Solar. Boom. This is what I do for every company that intrigues me. Well, I want to look at the chart. Why? Because the chart is going to tell me something's going on, but I'm going to have to piece it back together with fundamentals to fully understand what the chart is trying to tell me. So we're going back 2019 now. So the stock's just ripping, right? But what I noticed here is this massive cup and handle that we're creating. You can see how we were at these high levels up here, and then we bottomed out, and we're catching all these support. We're catching all this support around this 140 level. So that's interesting. But now I want to know the fundamentals. Boom. So while this is up, pull up our 100 baggers. What's the market cap? So then we go back, market screener, market cap right here, 21 billion. Perfect. Net income for 2026. We just go through this whole thing and we just answer the questions. So 2026 right here, you can see 6690, so 6.69 billion. Net income, 3244. Boom. Market cap divided by the net income, 6.44. So we're literally trading at only 6.5 times 2026's net income. That's crazy cheap. Revenue growth year over year. This is where this company really shows out. Financials. All right, so 2024 to 2025, we're going to 5631 from 4519. divided by 45.19. 24% revenue growth. 24%. Price to sales. So we're at 21 billion. Right here, they tell you it. 4.65. This company is so cheap. Price to sales divided by the growth. So we do 4.65 divided by the 24. Bro, this company is the cheapest company in my whole list. Watch. 0.19. Bro. Operating margin, 34.8%. $34.8. Operating margin plus the revenue growth. This question is important because we want to find the rule of 40. So the rule of 40, if you don't already know, it's the operating margin plus your revenue growth. You want that to be greater than 40. This is the type of companies that we want to be investing in. Why? Because that shows a company that's, one, either growing a lot, which means they would have like 40% year-over-year growth with 0% margin, operating margin, or two, it shows a company that could have 0% revenue but 40% operating margin, which means all the money's coming down to the bottom line, coming down to you and me. So our number here is 58.8. This is insane. I don't think there's a company that has this high of a number. Like, this company's so good that it scares me. It makes me wonder what's going on. What am I missing with the picture? It's because this company has the rule of 40. It's at 58, 34% operating margin, 24% revenue growth. And the revenue growth looks like it's going to keep going. They're going to make another $1 billion in revenue. So they're growing at about $1 billion a year in new sales, 18%. Like, this company's growing in high double digits. I'm not worried. And they're giving all the money to the bottom line. All this money's going to the bottom. All right. Like, if you were buying this company back in 2021, look at your operating margins, 15%. Your sales is under $3 billion. So you were paying, what was the stock at in 2021? That's the other question. So 2021, you can look up here. You can see right here, 2021, our market cap was $9 billion. Our PE ratio was 19. And now today, our PE ratio is 14. So our PE ratio has come down. The company's doing better. You know, if you hold the company, if you buy it today and you hold it and they do what they're supposed to do, by 2025, your PE ratio is going to be under 10. In 1 year, you're going to be under 10 PE ratio at a company that's growing at 18, 19, 20% revenue growth with operating margins well over 30%. With a huge TAM ahead of it. So that's the other thing. You've got to ask, what's the TAM? What's the total addressable market? Well, you just watched the video with Elon Musk, and he just explained how in 1 square kilometer, you have a gigawatt of energy hitting there. So an entire power plant is hitting every single square kilometer every single day. He's pretty much saying that we have unlimited energy. It's just a matter of building out the ability to collect that energy, which is solar. This is the company that you're going to be looking at. This is why this company is printing money. It's crazy how cheap it is. And one of the reasons why I believe that it's so cheap is because everybody's so focused on AI right now. And solar has had this massive dark cloud. You see this downward inflection in revenue, this sideways revenue from, look, 2019, they did $3 billion. 2020, they went down. They did $2.7 billion in sales. 2021, they did 2.9. They barely grew. 2022, they dropped to 2.6 billion in sales. That type of business is going to destroy the sentiment in the stockholders, especially a publicly traded business. So the valuation, it just got destroyed because the market just threw it in the trash. All right. If your company goes 4 years in a row and you're not growing the sales, you're likely trading at a very low valuation. But then all of a sudden we're shooting out of the gate in 2022 shooting to 2023. And really, this year is like the inflection point where we're going from these 25% margins to these 30+% margins this year, 40% margins in 2025, 48% net margin in 2026, 53% operating margin in 2026. That's insane. This is beautiful. This is a beautiful scenario for a long-term investor because you had the hype, you had the bullishness well before. The people that invested well before were investing for this, but they were too early. And then there was this downturn, this collapse that happened in solar. And now we're seeing the inflection point where it's time to get back in, and the stock is still relatively cheap. So when you look at this compared to other companies, not in the same industry necessarily, but other growth type of businesses, let's look at like MasterCard, for example. MasterCard, $426 billion right here. MasterCard, net income, $17 billion for 2026. They're trading at 24 times. This company, FSLR, is trading at 6.4 times their projected net income for 2026. All right. So you're getting it at a fraction of the multiple of MasterCard. Your revenue growth is 24% versus MasterCard's 17%. So price to sales, you're getting FSLR at under 5 price to sales. So the price you're paying, they're going to do that much in sales over 5 years. Versus MasterCard, it's going to take 14 years for them to do that amount in sales for the price you're paying. So then that affects your PSG ratio. The lower this number, the better for PSG. And then operating margin. Look, MasterCard has that crazy operating margin, 59%, because they're a big company. They've been doing this for a while. So you have 34% with FSLR. But when you look at the valuation, what you're getting massive growth. You're getting a massive TAM. All right, going back to the TAM point real quick. Let's ask our buddies here at the A. Great. Renewable. Really, we should ask the U.S. because this is an American company, so most of their business is probably in the U.S. 2022, renewable solar sources like solar, wind, hydro, geothermal, ocean energy account for 5.5% of total global consumption. 5.5, that's literally nothing. That's literally nothing. You know what that tells me? See, 5.5 tells me this. S-curve, baby. Look. S-curve, okay? We're like right here, 5% of global energy. When it gets to like 20%, you understand that when we go from 5% of global energy is renewable to 20% right here, okay? That jump is a 4x. People don't get that. This is a 4x. When you go from 5% to 20%, you're 4xing how much you're doing. So the revenues, 4x. The profits, 4x. More than 4x because the margins are expanding, actually. And then when you go from 20% to, let's say, 50%, guess what? From 5 all the way to 50, you just 10x'd. Okay, this is what we want to invest in. These are S-curves. These are massive TAMs, total addressable markets that have not been addressed yet, okay? So there's so much margin of safety when you have a massive TAM and when you're investing in a business that's already proving itself as one of the major players in that market. And we looked at the TAN ETF. This is the number one holding. So maybe if you want to play it safe, you just buy TAN ETF. But me, I like to be more aggressive. I like to dig a little deeper. I'm going to listen to the earnings calls for FSLR. I'm going to be there. I'm going to be paying attention. I'm going to be an active long-term investor, if that makes sense. So this is how I look at companies. This is what gets me hyped, gets me excited. Also, another major point is they're doing the buybacks. So they're already doing buybacks. Mind you, it's literally nothing, very, very little. But that gives me hope for the future that when they are printing money like maniacs, they're going to do the right thing with that money, which is to do buybacks, along with, of course, probably expanding operations, blah, blah, blah. That's what I got for you guys. This is how I look at companies. This is how I find out companies. I watched a stupid YouTube video of Elon Musk talking about, oh, wow, the future is all solar. There's so much solar hitting the planet. And then I'm like, that's right, John. I haven't checked out the solar companies in a long time. Let me go look into it. And then I find out, oh my gosh, they've been in this massive bear market for like 4 years. That's why I haven't been interested in them, because they've been in this massive bear market. And all of a sudden I'm like, I look at the next couple of years and I'm like, oh my gosh, they're going to print money. And then I look at the stock and I'm like, look at this valuation. And I'm like, look at this growth. And I'm like, this doesn't add up, which means stock price go up. And then you can even see it. It's already starting to happen. Look at the chart. Look at the stocks. Already starting to happen. Look at the analysts. They all have these crazy higher and higher projections for where the stock's going to go. So the next thing I'm going to do, I'm not going to do it in this videos. I'm going to go listen to the last earnings call. And then I'm going to be prepared for the next earnings call. And then if there's any more news that pops up, I'm going to, just grab onto that. Pay attention, pay attention, pay attention. Whatever you pay attention to, you improve. So pay attention to your money, folks. Stay healthy, stay wealthy. Stay tuned for the next one. My name's John. I got options. Make sure you like this video. Make sure you stay subscribed. We'll see you in the next one. Peace.